As always, thank you all for joining and listening and being a part of the Too Much community. The workbook, the Too Much Workbook, Tools to Build a Life That You Love, is live. You can purchase at deniselovehewitt.com. You can get it at any of the links in my bio. This has been a labor of love built out of my journey of redesigning my life. So I created this 40-page workbook to help you figure out what your blueprint is for your life, not what society tells you to be, not what you thought you should be, really what your soul is here to do, and to figure out how to design a life that's going to bring you a lot of meaning in a really challenging professional landscape. So please check it out. I really appreciate all of you for tuning in, being a part of this journey, and I hope it brings you an immense amount of value.
Really, the only indicator of wealth is that you have wealth to begin with. And once we know that to be true, then we understand that, oh, there has been a racialized, gender-based levels of discrimination that has gone into the way that we understand wealth building. Then therefore, capital itself has those sort of attributes baked into it.
It's not too much at all.
Hello, everybody. I'm very excited about today's episode because it's hitting a passion point of mine. We have the brilliant Jessica Norwood here with us today. Hi, Jessica.
Thank you for having me.
And Jessica is a financial activist, investor, and social entrepreneur. Jessica founded Runway because she knew that the only way to change the financial conditions for Black entrepreneurs was to begin moving money in right relationship. In order to do this, Jessica promotes the practice of friends and family investments, a form of pre-seed capital, or what Jessica calls believe in you money, to fund Black-owned companies. Widely recognized for her groundbreaking work in economic disruption, Jessica is a Center for Economic Democracy Fellow, an immediate past fellow for RSF Social Finance Integrated Capital Fellowship, winner of the prestigious Nathan Cummings Foundation Fellowship, a former BALLE Fellow for Local Economies, a lifelong fellow of the Sanford School of Public Policy at Duke University and Southern University College of Business for Emerging Leaders, as well as the Political Power and Social Change Fellow of the Hip Hop Archive at the Hutchins Center of Harvard University. Her innovative work has been profiled in NPR, Next City, Essence Magazine, Conscious Company, Fast Company, and New York Times bestselling author Edgar Villanova of Decolonizing Wealth calls her work the medicine modern philanthropy and investment need. Yay!
Yeah.
So I learned about your work actually through the Beloved Economies book.
Mm,
And we had her on the podcast because a lot of what I have been thinking about since I shut down my startup is we're living in this world where systems are collapsing that never maybe made sense, but they are collapsing. So, how do we build new blueprints for the new world? How do we find our path if we can't necessarily check the boxes that previous generations could more easily check? And
yeah.
so, what I've been learning through this podcast is actually the reality is the new blueprints exist all around us. People are already doing it, and you are one of them.
Yeah, yeah, absolutely, absolutely. Well, first, the Beloved Economies book and community is really incredible because they're talking about the ways that we think about work in a very different way. And alongside of that, we're thinking about capital and the kind of capital that gets to the business owners that are creating the working conditions that we most want, and noticing that those two things have to go hand in hand in conversation. So it's a fantastic project to have been a part of and to continue to be evolving that work alongside of some really dynamic folks that are featured in the book.
It's awesome. And so, for you, how did you decide that capital was your way into your mission?
I am from Alabama, and I think that's an important thing to note because I am the daughter of civil rights leaders and those folks who had really understood the message that Dr. King was talking about at the time of his assassination around what the economic responsibility is for a movement of equity and justice. And there is a video where Dr. King is on the road and he is talking about our food systems and agriculture and the sanitation workers in Tennessee. And he says, it's time for us to go to Washington, D.C., go to the government and get our check. And it was just a powerful calling around what this sort of capital expectation is for communities that have been historically marginalized and excluded, that there should be a responsibility that the government has, that we all have to these communities to say, you know, there has been unpaid labor. There has been extraction. There has been stolen IP. There's been all kinds of numerous things, communities torn apart in the name of urban renewal. And when you think about it, at the core of that, whether it's education or community economic development or wherever you're going to go with the topic, capital is going to permeate all of those areas. And so I understood that in order to really address some of the systemic issues that we were talking about, that we had to get in front of the conversation about how capital moved and what the expectations were around business and capital broadly.
Just to refresh some of the audience memory, because I talk about this a lot, but 98% of venture capital still goes to white men. You have 2% that's going to everybody else. That is the number one mechanism to build generational wealth in our country. And so I look at that, and it's what incenses me is you're not only missing out on brilliant innovation ideas that could make a more harmonious world and future, but it's a very clear bias against who can build generational wealth in this country. And so when you were building your model for Runway, can you tell me how you started to think about it? Because it is so different than other venture models we see, which when I was raising money, I was like, there has to be other people doing this differently. Like we cannot be relying on the system that is so fear-based and also so pattern-based.
No, those are really good points that you're making because, in a lot of ways, when we start thinking about, we'll talk about innovation in the terms of the business, or we'll even say, oh, it's innovative to have women entrepreneurs or people of color or all these other things. Or maybe geographically, we're going to focus on not just the coast, but maybe the US South and or the Midwest. And that in and of itself is innovative. But the reality is that without really thinking about how the money moves and what kind of money is available, we won't get to those levels of innovation. And in fact, we're sort of screaming in the wind at that point, with this idea of making real impact or real innovation, because we will turn off that analysis when it gets to the money, right? So we'll say everything else, yes, but then when it gets to the money, some kind of way, the idea is that the money moving doesn't have biases baked into it, that it must be separate. The money is agnostic of those things. And it's just absolutely not true for the points that you just made, because wealth, really, the sort of only indicator of wealth is that you have wealth already. Like that's the biggest indicator that you'll make money or have long-term generational wealth, is that you had wealth to begin with. And once we know that to be true, then we understand that, oh, there has been a racialized, gender-based levels of discrimination that has gone into the way that we understand wealth building, then therefore capital itself has those sort of attributes baked into it. And so one thing that I did pretty early on in this with our model was to think about that point and to say, this is really about repair, and to
Mm.
introduce pretty early on a reparative framework. And reparative capital, I'll talk about it a little bit later in more detail, but to just say that it really lays against the idea of, let's say, impact investing or venture by itself. With impact investing, we're saying, yeah, we want to have impact, but it does not say, well, who should be responsible? What is the
Mm.
acknowledgement of the history that's actually gotten us here? So it leaves out really important information. When we think about venture capital broadly, it's an exploitative and extractive system. It's meant to sort of set up a fund where you're going to have one outlier that will make it work and everything else will fall to the wayside. And it's meant to sort of grow at rates that often outpace human relationships. So the company's got to grow, grow, grow so that we can produce these levels of return for our investors in our fund. But that growth doesn't honor relationship. It doesn't really honor the way that the environment grows. It doesn't really respect a lot of things that really should be organic or things that we would call Afro-Indigenous, really like things that we sort of understand that we're connected to one another and we're connected to place, we're connected to people. And so by its nature, it's meant to be extractive and exploitative in that way. And so when we have people who are coming from these vulnerable communities, putting that kind of capital into the mix is only going to exacerbate what's already been a problem. It doesn't actually solve
Mhm.
anything. And so we knew that going in and said this model has to sort of sit at a place where it allows for us to personally do our work, to acknowledge who we are as people, to not disconnect from our humanity and our relationship as capital movers, but to also look at the way that this money place changes the experience for the entrepreneur or the business owner, and to think about systemically, how do we make things right because we put this money out in the world? How do we sort of change the field and change the lexicon, the quality of conversations that are happening in the capital field by just simply saying reparative is necessary
Mhm.
for this group of folks? And we've seen a lot of really interesting growth around it. And in every market, in every community, as you can imagine, folks are always saying, we need more of that kind of money that you all are
Yeah.
putting out. And so it does make a difference.
Can we talk about what that looks like in practice for people that might be a little confused about the nuts and bolts of how it works, like how you make an investment, what that means to be reparative beyond who you're investing in? How are you nurturing these individuals and companies?
Yeah, I mean, so that's a heavy question and there are a lot of layers into it, but I'll do my best.
Yeah.
So the first part of this is to really, as I mentioned, we focus in on right relationship. And I'll tell you, one of the reasons that we talk about right relationship is again, the relationship to time, to place, to people. Are we in relationship to this in the right way? Are we in relationship to our funders, our investors? Are we in relationship to our business owners and the folks who are receiving capital from us? Like, are we doing this in a way that is restorative, that gives people the ability to really grow, to feel good about what they're doing when they're taking this capital on, to feel like they have real partners and to experience it in that way? And so it starts off with what we have, which is a funder's manifesto. And we send that to every investor before we even get started on a conversation about investing in our fund. We want them to read this manifesto and understand all of the clunky and just sort of, quite frankly, ridiculous ways that folks who have money and institutions that are moving money to these kinds of funds like Runway and others put expectations on us, and then those expectations get passed on to the folks who are receiving our capital. And so we knew that if we were going to slow that whole pace down, it had to start with how we took in money and to get our power back. Power is a really central point that you're going to hear me sort of reference a lot, because this is about also shifting the balances of power inside of these relationships. So we start off with that place about really educating our investor community about what it means to move in right relationship with us. And you can see that on our website. There's a funder's manifesto that you can read. Many, many people have copied that manifesto and used it in their own different ways, because it's a way of starting the conversation about power imbalances and how we right the ship so that we can do the mission that we're all interested in doing. The second thing that happens for us is that we have a really unique way of underwriting our deals. So some of this is proprietary, but in the traditional underwriting of debt, and Runway can do, mainly we do debt, but we can also do royalty shares, we can do revenue shares, we can do equity, and we've done some of those deals, but mostly what we want to do is debt, because we don't have a need to try to take ownership of anybody's companies. And that's another power dynamic thing. We really want to give people capital that is long term and patient. And so that means that you're going to have 5, 7, sometimes even 10 years to work with the capital that we give, or that we're making as an investment. And that capital, some of those terms are we never go over 4% no matter what the market is doing. We don't go over 4% in our lending. And the first 2 years on most of our products are interest only payments. So it gives people the opportunity to sort of feel like an equity investment where you get a chance to work with the money and really make the improvements in your business or make the next, purchase or thing that you're going to do with your business before you get to paying principal back, which is usually around year 3. So the terms are very different. The
Mm.
underwriting is very different, where we're looking at the character of the person. We're not just looking at your credit score. We're not even looking at the credit score. We understand that those credit scores are based in a lot of historical bias and doesn't actually show how strong the business is, how strong the entrepreneur is, and what the ability of repayment really looks like. And then finally, what we do is the way that our funds are dispersed, we use a strategy called community led lending, where in each market that we're in, there is a local steering committee and there's a local loan committee. So that means that people are making decisions on whether or not capital goes into a business, not from some technology piece or not from a group of folks that live somewhere where they don't even know whether or not your restaurant is going to make sense at that particular location, but from real people who live in that community
Wow.
and who want to see businesses in those communities. We've seen a lot of really wonderful ways where just by putting the resources, those specialized loan funds into community hand, how much power is actually generated, because now as a local person I can stop that gentrification from happening, or I can keep my favorite restaurant in the community because now I have resources that I'm able to make investments in them, and I'm able to sit at the table in a way where I understand capital stacks. I'm able to talk to local government about what's needed and how to be in support of what we're doing. So there are a lot of ways where, again, we sort of are breaking up that point about power and where power is held along that model.
This is so cool. I'm a bit geeking out over the details because just to frame it for some people, like the way that venture capital works is you probably have 90% of venture capitalists who went to the same university. So the same school of thought. You don't have diversity of who is deciding who gets the capital. And then, people are like, okay, you have all these different funds that are so inclusive, but the numbers aren't changing. And I'll tell you why the numbers
That's
aren't
right.
changing. The numbers aren't changing because they're asking the same people for the capital and they have to prove their first fund to get their second fund to get their third fund, and maybe fund 4 they can start taking the risk they want to take, but that's years.
Yeah.
And so
Yeah.
that's why the numbers haven't changed, and frankly why they've gone down despite women getting higher return on capitals, the data shows. And so I love that you're creating this different relationship of here's the funder manifesto, this is how we operate. And that's so incredibly important. I'm so interested in patient capital as a founder and creator. And I have conversations, I live in Los Angeles, about parts of Los Angeles that are being gentrified, for example, and friends that want to, keep the neighborhood as it is. And how do they do that? And you're offering such a just like holistic solution to a lot of these issues that people who have the capacity and want to create fundamental change but maybe not have the right resources. What I found when I was raising money, my values were butting up against the system and I was not willing to be somebody else to raise that money, and that's how a lot of people feel. And so then we miss out on great ideas or great businesses because I'm someone who I have to live in my value system, which, I think more and more in the times we live in, that is becoming more of a siren call for lots of people.
Absolutely. Absolutely. Yeah. Yeah. I've seen a lot of companies who have tried to put their mission and their values behind, okay, I just need to get this capital. And if we can align maybe on this one point, or I can show that this is the return arc, then they'll say yes. But it isn't worth it at the end of the day. And ultimately, you'll give up so much of what makes the work and you special and important and necessary in the world, trying to fit into a box that's already designed to exclude you. And
Yeah.
so for us, it really is about, again, seeing our own humanity, seeing ourselves in one another, and saying that that isn't disposable. And in fact, that there are other ways to sort of build something that really captures the truth of who we all are. And venture is one particular type of capital. I think one of the things I would want folks to really understand is most of the businesses that I come across are not venture backable kinds of businesses. These are businesses that don't want to grow at,
Yeah.
X amount of rate. They aren't looking to be sold or to go public. And in fact, people are you looking at those businesses as opportunities to build generational wealth. And I think we've missed an opportunity to talk about businesses that grow thoughtfully and really big, by staying in, ownership with that person or with the workers or however the ownership is. But it doesn't have to be that the only way that you get capital is by going a venture route, when even
Right.
venture doesn't really fit a lot of our companies.
Well, I don't think at this point, a lot of the venture-backed companies shouldn't even qualify to be venture-backed because they're
They're
not
not.
necessarily
They're not.
scalable. We're just making
Right.
everything solving non-problems.
Stop solving non-problems with, no real revenue to speak of other than what gets pumped into them from each different round. Yeah.
And what's disheartening, because I think a lot of founders, because venture is so glamorized in our media and our culture, what they don't realize is, yes, it's a system that's not built for a lot of people. But also, I think what was heartbreaking for me, because after I shut down my company, I was helping a lot of startups through a fund. And, they're pitching these funds that are supposedly caring about mission-based companies, supposedly inclusive. And then you realize that there's misaligned incentives, right? Like, so they're saying this on their website, but in practicality, that's not actually how they're investing. And so it becomes this like heartbreak of your sort of belief system or hope. And so I want to show people there's so many different ways to build companies and there's so many different capital resources available, because hitting that misalignment is so painful to be like, well, you said you were about this thing, but you're not living that in practice. And so many people are not walking the walk and talking the talk.
Yeah, no, it's absolutely true. One of the things that Runway, and I mentioned this, is fundamental about what we're doing is around being in right relationship to the values that we have, to the people, to the community. We want folks to lift the hood up and look at what we're doing and ask us questions. And I think to have a relationship where we're taking in capital, I'm going to also say that new responsibility has to come to our entrepreneurial community to not only look at what they say on their website, but to ask them questions about whether or not they understand reparative. Do they think about questions around right relationship, and how is that guiding their framework? I think we have to imagine that we're in a relationship together. We're going to take money in and we're going to, do a particular thing. And so just as much as they are asking you questions, you should be also asking really important questions, and to not take it personal when you're getting the no's, because what we're saying is that there is a whole system here that's already designed to shut out so many people because of its nature of exclusivity. Either you went to the same schools together, or you all are friends in the same network, and your firm is going to do, this series, and then your next friend is going to do this next sort of follow-on series. And so all of those things are already baked in, and that's why we don't see the real growth happening. And I think that's the important part of Runway and some of these alternative strategies that are out there, is to really push back against that and to give people the language that they need to know how to have these conversations in a real successful way.
Anytime you're starting something new and pioneering a pathway, there's a lot of education that has to happen for people to learn what you're doing. So did you find when you started this that that was true? What were some of the challenges? Do you feel like you were really educating a lot of funders on how to join what you were trying to build?
Yeah, no, it was a mess. When I got started, we've been at this for 10 years, and I used my prize money. So I also like to give people my founder story as well of how it happened. I won a fellowship that came with prize money, and I used my prize money to start Runway. And at that particular time, there was this piece of conversation that everybody has where if you're raising money, people say, your first sort of set of money that comes in is usually like your friends and family money. And I was hearing people say this over and over and over again. And I'm also looking at the data around the racial wealth gap at the time. That was the language that they were using. And I remember saying, well, what friends, what family are y'all talking about? Like, where is this gonna come from? And I was so shocked that people hadn't put those 2 thoughts together. I thought I was just sort of saying something that everybody understood.
Right.
But in fact, they were comfortable with saying, "Oh, well, this is the way things go," but not really interrogating with any real thoughtfulness about, well, what does it mean when you're telling, a Black woman like myself as a founder that I should be getting money from my friends and family? Like, how would that even really work? And if it doesn't work in the beginning, why do you think it'll work at layers of other capital along the way? Like, if I can't get started, how can I meet you at a pre-seed, seed, or any other place along this sort of capital continuum? And so I started off pretty intimately at that first place because I wanted people to understand what it meant to get $50,000 unencumbered. Like, how does that work when you're just getting a little bit of money to get the idea going, to get a proof of concept, to maybe help you to travel to the conference or convention where you can sell your goods? Like, what kind of money is that, and where does that come from? And early on, I remember being at a major conference for investors, and at that time, there was a racial justice track, meaning that, just like you have gender lens investment and you have racial equity investment and you may have environmental investment, it was its own sort of asset class sector and track at the conference. And what I remember thinking about, I was on the main stage and they were really generous to give me some time to talk about this in its very, very infancy. And I was pouring my heart out about what our communities have endured and how difficult this is to get access to capital. And people clapped. And I was thinking, no, you need to be crying. Like, this is heartbreaking. But it was a
Yeah.
polite applause. And some folks came up and said, okay, now tell me, how do we invest? And they wanted to get into the transaction of things. But I was still in my mind,
Mm,
still thinking about what it is that we have endured and overcome and what we really needed in relationship. And I couldn't get people to sort of see that equity and diversity and inclusion and women and queer folk and all of these different communities had to be included in the entire thought process. It couldn't be something that you extracted from environmental justice. It couldn't be something that you said, oh, well, tech is this but racial equity is this over. It had
right.
to be everywhere in it in
Yeah.
order to get a real solution. And so I struggled a lot early on of really getting people to not segment us as a separate thing, but to understand, no, this is the thing. This
Yeah.
is what we have to really address. Because if we can't get in front of how the money is moving and why it's excluding and why it's harming
Yeah.
people and places, then we won't ever be able to get the kind of technology that we
Mhm.
really want and need in the world. We will only have it created by the same old folks doing the same old kinds of things. And in fact, a consolidation of power and resources will continue to happen if we don't get in front of that conversation. So that was really difficult. And there was a lot of education that we had to do early on. And thankfully, as we brought in great investors, those investors understood, because we got that great funders manifesto, what we were up against. And they said, Jessica, don't worry about talking about this. We'll go out and talk about it. And when we think somebody's ready, we
Amazing.
will call you and say, this person is now ready. So the majority of our investors come from referrals from other investors who say,
Amazing.
this is where you need to go and where you need to be. And I'm grateful for that, for sure.
Well, you're doing the thing, which is nothing changes unless the system changes. And we need people who are exactly what you're saying, not segmenting or saying this is something over here. It's like the system is flawed. The system has to evolve. So how do we do that? And here you are for 10 years, you're showing us how to do it. And this is what I can't drive home enough is that as we look towards the world that we want to build, everything we want exists. We have the opportunity to implement the learnings and expand it. So, as you've built this over a decade, which congratulations, that's very hard to do, have any business for a decade, amazing. What
Thank
has
you.
been one of your great learnings?
Mm. Yeah, there have been some really triumphant moments. One that always comes to mind for me is during the pandemic. And, to sort of set the stage for everybody, we're in the pandemic, we're very early on in the pandemic, and we've already said that the majority of our portfolio of companies have faced a lot of discriminatory practices, have historically marginalized. So they don't have the kind of money in savings or from friends or family that will help them to withstand being closed for 1 week, let alone an foreseen amount of time at that point. And I think a lot of businesses face a lot of financial challenges. But you take that challenge that we understand it being, and then you overlay that with communities of color who have been completely left out, and then you start to feel the real tightness and fear that was really bubbling up. My whole portfolio is made up of companies like that. And so we understood pretty early on that we needed to do something wildly different. And we knew that if our investments didn't hold, then we wouldn't make it. Like we're all symbiotic. We're connected to one another at this point. And so their success is my success is their success. And we decided to do universal basic income payments. And at this point, there's no funder or investor that's saying, I'm going to give you UBI, I'm going to give you universal basic income. But we knew that this was the lifeblood that these businesses were, how they paid their rent, how they paid for groceries, how they, took care of their children or aging family members. And at this point, there was no program that the government had come up with yet. And so when we think about payroll protection program, PPP, that later came online, this wasn't available at this point early on. And so we started making $1,000 payments every month to our entire portfolio. And I think we had about 80 companies in our portfolio. So about $80,000 a month, every month for 6 months,
Wow.
just sending money that they never had to pay us back, that you just use it for whatever you need to use it for. And I'm really excited because all of our businesses stayed open during that time. All of
That's
our
awesome.
businesses were able to pivot from ones that were doing brick and mortar to kind of getting online. We also went and renegotiated their terms of all of their loans. So they had 6 month deferments as well, because we didn't know how long this pandemic would really last. But we also made it so that they didn't have to do any payments or worry about every month calling back to the bank or their lender or whatever it is and saying, oh, well, we need more time, and no more stress about those kinds of things. And I remember when we made this announcement first to our investor community that this is what we wanted to do, and that we needed their support and their blessing. And I was grateful that they said yes, because we had never been tried before with a community of
Yeah.
businesses. And then when we talked to our portfolio, we had a special phone call. We put everybody on the phone call and we made the announcement. The way everybody just cried and just, I mean, a sigh of collective relief.
Mhm.
At one point, I thought the cameras were failing because everybody's screens went black and people had to say, no, I had to turn the camera off because I didn't want you to see me ugly cry, in the
Yeah.
moment. And so it was a really, really beautiful moment. And I think it expresses who we are as a company at Runway, that we see our greatest success in the success of our companies and how they grow, and we grow alongside of them. When they're looking for more capital, we're there to provide more capital. We love making introductions to other people who are going to be aligned investors. So when you get into the Runway family, you are really family. And
Yeah.
It was an important moment for me to sort of not just talk about it, but to really be about it when the moment sort of called for that kind of thing, that we were able to step up and stand in it in a way that I feel really proud of today.
It's that kind of innovative thinking we need because now you have data, right? Like we did
Yeah.
this and it worked. All the business stayed, all the businesses, none of them folded. Why we have to try new things because the data will surprise us, but everyone's too afraid to like try something new. And if we want a healthy economy and a healthy world, we have to try new things to create that because that's not the
Yeah.
current culture we're living in. And
Yeah.
so, speaking of that, in a world that's never been overly warm to DEI, we are certainly living in a time where it's probably the meanest it's been in my lifetime, maybe. We saw last year over 300,000 women of color lost jobs. And so, what has been a major challenge for you in this landscape? Because even like in 2020, I started my business in like 2016, shut it down maybe 2022. And I felt there was at least more of a conversation, more of a warmth. And a lot of my friends had said, this is going to be trendy. And I was like, yes. And because, you hope that through the awareness and through the learning that it's not trendy, that it becomes a part of how you live. And what we've seen in the past year is how quickly people would forsake values for the sake of profit. And so, or perceived profit, right? Because what's happening right now is
Mhm.
not very sustainable. But I would just ask how that's affected your business.
Yeah. I mean, the interesting thing is I feel like we might be a canary in a coal mine. We had retraction happening even before the 300,000 women of color. You saw maybe in the headlines the attacks against the Fearless Fund, which is another incredible fund supporting women of color, or Alice, I think also was got caught up in a lawsuit about, are you only focusing on women and not available for everybody else? And so we had to go through and spend a lot of money on attorneys and doing some work to try to navigate through those storms. In previous administration, when this administration was in office before, they started off with executive orders around DE&I, and it didn't get into the mainstream in the way that they were able to move it through the different departments of government like they have this time. But that last time, it was rocky enough that partnerships that we had, where we were working with publicly traded companies that had shareholders, and their shareholders are all friends at that point. Like
Yeah.
when you were sitting at that level and you're talking about finance and you're here and there, all these folks know each other, and very unceremoniously removed contracts from us because they saw, an executive order from way back saying no DE&I. And so I knew that this would happen probably 4 or 5 years or so ago, of watching and reading the room. It's still devastating to see so many women of color, because those women represent head of households. Those women are often caregivers. They are taking care of children or taking care of aging parents. They are the nucleus in communities. They are heavily educated. They know a lot of, I mean, brilliant, brilliant, brilliant people. And we've displaced them out of the workforce. So the sort of smaller ways, or more, I say smaller, but the more traditional ways of building wealth, where you're able to stay on the job, have good benefits, have some stabilizing income coming in, purchase a home, stabilize your family. Those things are wiped out now for a lot of people, and particularly women who are already underpaid and are already facing, just getting to the places in our movement around wealth where we're able to do those things without a man or husband or father co-signing on getting a bank account and all those. Like, you're just a new generation in to where that's even a possibility. So it's very harmful. It's also harmful when we overlay that with DEI moving through the ability to get an SBA loan or contracting opportunities at, state and federal levels. When we look at the opportunities for, minority contract, women owned contracts and so forth, there are a lot of businesses that were stained because they had those opportunities and programs, and those things have also eroded. So we've got 300 and some numbers even have it at 500,000. I don't know which one is right, but we have a whole group of very talented, capable women who cannot get even into business ownership because there
Yeah.
isn't any money through SBA. There's no opportunity for government contracts really available for them in the same way, and not enough private capital. We also see the sliver of money that goes to venture to women, and even more, so of a sliver when you start saying women of color. And so we really see that they're going to have to find these women are going to find themselves in business, but they're going to find themselves starting, their own companies, maybe being a solopreneur and consulting, but without the level of capital support. And they're going to end up having to build at the level of capital they have available. That means that they could be building scalable companies, but because they don't have the pathway to get to that kind of money,
Yeah.
they'll have to go and build something that fits what capital is available for them. And, that may not really meet the moment in time in the way that we really need it to.
Yeah. And just to give everyone some context, women of color are starting businesses at a higher rate than any other demographic. And for me, what this points to is that we have a clear systemic limitation for business as usual, right? So they're starting it because they have to. It's the only way to really control their financial future. And so we're getting great businesses, but when we do that and we exclude people from these systems, the systems continue to operate the way they do, and then people find their own path outside of it. But if we nurture the people in the system, you get more beautiful solutions, because it's been proven time and time again that the more diverse staff you have, the more innovative the company and the more profit you make. It's like we have the data that should at this point make
Yeah,
people.
the
I'm always like, we have the data. We think at this point we'd be doing things differently, but nope, we don't. Okay. So
data.
so since you've started your company, have you seen other people following in your footsteps?
Oh my goodness. Yes. That's probably the sweetest thing right now because now I didn't imagine that 10 years would make me an OG, but apparently it does. When I was starting out, I was often, in the first class of fellowships that might focus on some of these things. And now these one fellowship, shout them out, Just Economies Fellows, JEI, they are now, I think, on their ninth class. And so nine
Wow.
years of, with hundreds of folks who are coming in thinking about and doing values-based alternative investment. That's the whole thing of the fellowship. So reality is there are so many more people who are stepping into these conversations and these roles in ways that I would not have even imagined when we first got going here, because it was just a few handful of us and we would see each other at conferences, and now there's so many people. And one of the things I get a kick out of is when I get a chance to be on a panel or in conversation and they tell me that my work is something that inspired them. They may have heard me speak, or they've referenced my work as a part of how they were thinking about shaping their own funds, and they put their own unique spins on them. One fund that I'm really fond of, Orchid Capital, is focusing on maternal health and some of the health crises around that. And so thinking about what is the investment that we do to make our sort of holistic system around birthing much more reparative is
Yeah.
a huge conversation. But to think something that I was doing that they were watching and thinking about this has been really great. I've also seen our work showing up now in women's sports, which is a huge, sector and area growing. And, you'll see some of the, big folks out there with their venture firms talking about ownership into sports clubs and so forth. But there are a lot of other companies, from women's sports bars to athletic apparel, all kinds of companies that inherently, because these women have been excluded for such a long time, they already come in with an idea of inclusion and diversity and equity already baked into the DNA of what they're doing. And it makes a perfect place for reparative capital to be showing up. So I'm seeing it happen all over the place in philanthropy. It is showing up in foundations really saying we need to take a step back and think about how we're moving our capital inside of a reparative framework. And can foundations show up more as first investors in
Yeah.
and starting to really question how they move and think about their portfolio of grantees as maybe more of an investable group. And so, yeah, there's a lot of really incredible growth of the field around repair and of thinking about community led funds and strategies that are long-term patient, and we stand on the shoulders of really incredible folks. There were folks who were doing this in the food sector before I got here that I learned from, and we've been able to sort of take it to the next level. And I see a new class of folks taking it to the next level too.
It makes me feel very excited and much amidst a very like chaotic time. I do think this podcast every week gives me deep hope in the future that we can all create together. It's awesome to hear that that's a movement that's happening. And before we go here, if I'm starting a business, what is a piece of advice you would give someone that wants to go on that journey?
Yeah, such a great question. Listen, I would first say to know your why you're doing a thing. There are a lot of easier things to do than to start a business. You can certainly purchase a business. You can, do franchising. There are lots of other things that you could do that'll probably get you there if the goal is to make some money. And that's the thing. There are a lot of other ways to get to that point that I would say think about your why. If you've got a burning idea and a vision for something out in the world, then I think that is what the world needs right now. We want your best ideas. We want capable, smart, loving people who are dedicated to our humanity to be out making great companies. And so I would say to first get with other folks who share that same vision and idea and hope for the world, because you need people to pour into you just as much as you're going to be pouring out. It's going to matter really early on to have a network of folks that can pour into you, whether you call them mentors or these are colleagues or people who are in your fellowship, or maybe these are people who are in your graduate program. Wherever you find those folks, you want to lock in with some really talented people, because you'll sharpen each other over and over again. You've got an idea, you bounce it off another person and they'll help you to refine it and get it better. And you need that sort of very quick feedback loop early on in your business journey. And then I would also say to really pay a close attention to the things that matter. Once you know your why, and then think about what at the end of the day really matters. It's not successful if you lose your voice, you lose your way in your business. Then you didn't really make it, I don't think. And so understanding what you've got to protect, what is important that matters, who's important, your workers, your team, who you are in collaboration with. Those are the things and the people who really should matter, the people who helped you to get there. Keep those people close to your heart and keep them protected. Keep yourself very protected, and know that that's a line that you just will not cross. And make those boundaries early on about what you won't do. Know those things ahead of time so that when you get into a conversation about capital, you can sit in it from a place of power, knowing that this is an exchange and a relationship. This isn't something that's meant to be extractive and you give away everything just so you can get a chance at a thing. You'll find your right place and you'll find your right people if you trust yourself and you trust the boundaries that you sort of set in place. Then the right people will show up because they will honor those boundaries, just like any other healthy relationship, right? That happens is the more that you know about what you're trying to achieve and what you will and will not put up with, the better partner you'll become, because you'll be able to sort of tell the truth to yourself and to others when you're entering negotiations. And that's from capital to selling your product, all up and down the spectrum of ways that you're going to do deals and transactions. That's going to really matter. And I would say, yeah, believe in yourself and keep people around you who believe in you as well, and keep good counsel. That's going to always make the difference.
I would say there's probably no better encapsulation of business advice. I was like, yes, 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 yes. Because I just know so many people that lose themselves. And so it's so important, these boundaries, telling yourself the truth, having people that also tell you the truth. It's
Yeah.
so beautiful. So if
Yeah.
anyone wants to apply to Runway Capital or find you guys, where can they find you?
Yeah, visit our website, and from there, it's runway.family. And because it is a family and family is the extension. So visit the website. It lays out all the ways that you can get to know where we are. We're operating really heavily in Chicago, Boston, Oakland. But there's also other information if you're not in those geographic areas about how to connect with us. And it also tells for folks who are interested in investing how you can actually do a place of in capital investment with us as well. So it's a great set of resources. And then sign up for the newsletter because we are always putting out invitations where we're hosting conversations, really beautiful dinners and things like that, that you're absolutely welcome to tap in and join us and get to know us personally. And obviously a personal relationship carries you the rest of the way here. So yeah.
Yeah. Thank you so much for your time. Thank you for the work that you do. I'm truly a fan and so grateful that we could share more of the story on Too Much. So thank you.
Thank you, Denise. I have enjoyed it. Thank you so much for the time.
Thank you so much for listening. If you do like listening, it would mean the world to us if you could subscribe or review the podcast anywhere that you watch or listen to the podcast. It really helps with the algorithm to share this with the world. I want to give a special thank you to young Spielberg and Sarah Yarkin for their beautiful work on our opening jingle, Dana Boulos for her help with the beautiful art, and to all of you for tuning in and keeping this dream alive. If you want to hear certain topics or from certain guests, please feel free to email us. We really, really want to hear from you and see how we can best support you.